Hello and welcome to a very special London South East live event with Greatland Gold Managing Director Shaun Day. We've held a couple of Greatland Gold live events already this year, and they've been really hugely successful with over 700 registrations for our most recent town hall event in July. I'm Donald Leggett, Head of Investor Relations at London South East, and my job today is to welcome Shaun and put your questions to him, really acting as a conduit on your behalf. But before we do so, let me say how sad we were to learn of the passing of Her Majesty the Queen. On behalf of everyone at London South East, I'd like to pass our condolences on to her family. The Queen, as we all know, was an exceptional individual who lived a truly exceptional life. And she touched the lives of millions of people here in Britain, in Australia, and across the Commonwealth, and indeed across the world. And we were very sorry to hear of her passing. Shaun, might you want to say a few words at this point?
Yeah, thanks, Donald. I think you said it well. An exceptional life of service, and I think respected throughout the world, not just there in the UK, but throughout the world. And it's been an incredible event to observe from here. But yeah, our condolences to the royal family for the passing of what has been just an amazing reign.
Thank you, Shaun. Greatland Gold really don't need much of an introduction from me, but nevertheless, very briefly, let me encapsulate what's happened in a brief 25 seconds for you. In 2018, Greatland discovered what is rapidly becoming one of the most exciting Tier 1 gold copper finds worldwide in the Paterson region of Western Australia. They subsequently partnered with Australia's major gold producer, Newcrest, and under the JV agreement, Newcrest had an option to buy a further 5% stake for $60 million, which they didn't take up. As managing director, Shaun was under pressure to quickly come up with the Greatland Gold share of development costs and to repay the $50 million loan from Newcrest. And this is what we're going to talk to him about today. He quickly put together a package of debt and equity funding to fully fund Greatland's 30% stake in Havieron to completion. I suspect one of the moments of AIM history, and we're here living it at the moment. Would you like to put that what I've encapsulated? Would you like to put your announcements in context for us, please, Shaun?
Yeah, no, look, thanks for that introduction, Donald. I don't have any slides to speak to tonight, and yeah, I think we all enjoyed the Q&A. So let me get to that reasonably rapidly, but maybe just to go through in sequence today's announcement. So I think firstly we have the board. We have three directors joining in due course. Initially, Jimmy Wilson. For those that don't know, Jimmy was head of iron ore at BHP, had a long and distinguished career at BHP, has a formidable pedigree in mining operations, effectively a 2IC, I understand, of BHP. So to him to join the board and in an executive role can really help us around the time of receiving the feasibility study, but continue to build our team, continue to have his insights on the development of Havieron, but also as we look at other assets, the exploration, but also looking at other inorganic opportunities, to have someone of his caliber to be working on that with us, I think is a tremendous opportunity. Then in the deputy chair role, commencing on or before the 1st of January, we have Elizabeth Gaines. Again, look, huge profile and presence, I think globally, certainly in Australia, seen as one of the top executives, not just in mining, but you know, a top executive. Just finishing up as the MD and CEO of Fortescue, $50 billion top 10 ASX listed company. Just a huge amount of development and growth under Elizabeth's stewardship. She's has this background in private equity, background as a CFO, incredible strategic thought, and operational experience again. So she brings her own incredible experience and expertise to the table. And then also joining from the 1st of January, if not before, is Mark Barnabar. Mark is Deputy Chairman of Fortescue, again, $50 billion enterprise. In addition, he was previously Head of Global Investment Banking Resources for Macquarie Bank, and presently sits on the Reserve Bank of Australia, your Bank of England. So again, his pedigree, his commercial insights, his strategic insights as well are going to be invaluable, and all of them bring tremendous skills, different skills, but also overlapping, and really complete that board in I think one of the best boards literally in Australia. So and the thought process here is, if we surround ourselves with A-grade talent, we increase the probability of great outcomes. I think the second piece I'll speak to just now is the debt. So a 220 Aussie million commitment letter with 3 Main Street Tier 1 banks, HSBC, ANZ and ING, all very prominent names in resource funding. So with those coming in, 7-year facility, very competitive interest rate, 3.5% plus benchmark. Just to put that in context, we will, when first drawn, we will repay the Newcrest debt, which is 8% plus benchmark. So you can see straight away a massive arbitrage of saving there. But the real key here is it's $220 million. So that provides a huge step towards fully funding Havieron, and it gives us a tremendous amount of flexibility over a 7-year duration debt piece, with repayments not until after project completion, plus 12 months after that. So it's an extraordinary high quality and flexible debt piece at good pricing with our preferred partners. And I'd really just like to again acknowledge that ANZ, HSBC and ING are joining. We selected them from a process, and we feel very strongly about these being enduring, long-lasting banking relationships. And there's a lot to unpack, because there's a third element to today's announcement as well, which is bringing on a strategic equity investor in Wyloo. Look, we couldn't have a better partner than Wyloo. We're just delighted to have them on board, and what they bring with an initial, I think 9.6% stake. They've come in basically at market price, a very small premium to the last 5 days, but at the same price as that last placement. Ordinarily, you would see placements done at a discount. So for us to be able to bring them in at this pricing just talks to the conviction they have around the asset and the team. And we're really thankful for them being prepared to come in at that pricing. And then again, they've also, you've got 2 tranches. So our first $60 million Aussie investment, and then another 60 million, but it's 35 million pounds of options, which is at a 22% premium at around 10 pence. That would give them a total investment of around 120 million Aussie. So a really big strategic stake, initially 9.6% stake, that can rise to about as much as 14.5% stake, but they become this strategic shareholder, and really someone who allows us to work over time to fully unlock the value of Havieron. So, this trifecta of having, this tremendous augmentation of our board, recognizing the great job that the existing directors have done, coupled with the debt piece, and I understand the magic of leverage when delivering shareholder returns, and then that third piece being Wyloo, absolute investor of choice as a strategic partner. So really delighted, Donald, and delighted for our shareholders to deliver this outcome today.
Okay. So thank you for that, Shaun. Bamps said on the boards this morning that he's never come across an AIM-listed business with the capacity to raise almost 200 million of funding before the full feasibility study like this. So you've already summarised the debt and equity funding package, which was what I was going to ask you for, but you've done it. Give us the background to how you managed to pull it all together so quickly. Tell us the drama, because this has been done in no time at all, in effect.
I think, what I've talked about, on these kind of webinars with yourself, the LSE, Donald, but also I think across a range of platforms is I've talked about, people should have confidence that we're preparing. And, it's in some ways it's kind of you to say this has all been put together in no time. But the truth is this has been a tremendous journey, and really now shareholders are seeing the culmination of that journey. So in terms of the elements, look, I've talked about a transition period and transition issues that had to be overcome around the pre-feasibility study, around the option, and achieving an outcome with that option and being fully funded. And I talked about trying to give myself around 18 months to solve that. And I feel today we've switched from defense to offense. And so if I look at those three parts, I think I first, went to a headhunter when Alex asked me, look, would you go out, Alex Borelli, our present chair, and said, look, at some stage, I will be looking at stepping down from that chair role. Would you please go out and consider who you'd like to bring in? And I sat down with a headhunter, and number one on my list was Mark Barnabar. I'd worked with Mark Barnabar before on transactions, and just had a huge amount of respect for the way he goes about and about transactions and the way he carries himself. And I think we always got on well through that process. So I thought I'd start at the top of my list, and I reached out to Mark, and really that's been virtually a 12-month process. But with that, we've also been able to kind of bring in Elizabeth and Jimmy and thought about what skill sets do we want on this board to really
Mark
create.
recommend Elizabeth as a suitable person?
Yeah, absolutely. Look, I knew Elizabeth a little bit, but Mark knows her well, very well. They've shared a lot of the Fortescue journey together. So being able to kind of have Mark as to kind of bring to harness that group together. Again, with Jimmy, we sat down and wanted to think about who would be just an audacious outcome to bring in with an operational background. And, again, bringing in Jimmy Wilson, who, played such a prevalent role in the world's largest mining company at BHP, I think is extraordinary, particularly for him to be, coming in a part-time executive role. I think that's an extraordinary, and again, I think that is a demonstration of the commitment that team has to Havieron and Greatland. And then, we talked about the debt piece. I think, again, I've been pretty open with shareholders that we started that at the beginning of this calendar year. So again, that has been an 8-9 month process, but we needed to know what percentage of the asset we own to fund it. Although I think when we thought about this, we always said, well, let's fund the 30%. It will be always easier to go back to the bank and say, no, we want to borrow a little bit more. We had a mechanism in there that could adjust either way. As it happens, we didn't need that mechanism. We got the best possible outcome from that option. We keep the full 30%. So, that's been a kind of a 9-month journey. And I think I started talking to Wyloo,
can I just interrupt you there? Yeah. How many banks were prepared to offer you term sheets? I mean, did you actually do a beauty contest across banks and get your pick of the banks?
Yeah, we started with over a dozen banks, and we slowly went through. And I think I mentioned around our selection of ANZ, ING and HSBC, it really was about the banks that we felt from a relationship point of view and from a long-term commitment. Without going into each of the banks, too deeply, I think ANZ's been part of every funding I've done since about 2004. So my relationship with them is bordering on 20 years. A number of those banks were and still are kind of Northern Star funding banks. So again, it's continuity of those relationships and preservation of those relationships, and then bring those relationships across for long-term creation of values and partnerships here at Greatland. So, again, it was about spending 9 months of preparation to be able to move quickly when the opportunity arose. And then with Wyloo, look, I think success breeds success. We had that really good experience of going out to the market for equity in August. We had Tribeca come in as a cornerstone shareholder. I was then able to articulate to Wyloo around the debt piece coming to its conclusion, around the directors we were bringing in and the quality of those directors. And this has been synchronizing, these three elements has been a little bit like being the conductor of a symphony. It's been trying to bring those pieces together and collectively helping each part make the other part more likely or better to happen. And I think that's what we've achieved with today's announcement.
Okay, it might be worth expanding on the fact that you actually needed that 60 million Aussie dollars of equity, that you needed the equity stake in order to be able to fully draw down on the larger 220 Aussie dollar debt facility. Do you want to unwrap that for us?
Yeah, we'll look at, again, this is something shareholders, should know. I've been warming them to, really, again, for the last 12 months, no project is banked 100% debt. There's always some equity needs to sit aside it, and everyone who's taken a mortgage out on a home or probably bought a car knows that the banks sit there and don't want to lend 100% of that asset value. They want some equity sitting next to them. So, and this level of financing has exactly the same principles. So, and look, what this allowed us to do is, with this final piece of equity, is to be fully funded. And not, we are fully funded clearly on the PFS, but also create a funding environment where we are confident that when the feasibility study releases, that we have the headroom to accommodate that as well. Now, time will tell, but we really feel we're in a very strong position vis-a-vis that $98 million of capex on the feasibility, on the pre-feasibility study, to feel confident that we have the kind of funding platform across debt and equity to be fully funded across a range of scenarios.
Okay. Chris Kirk asks, will you be paying the US $50 million Newcrest loan back as soon as you get the funds? What's the timing on that?
So yes, is the answer to that, Chris. So as one of the first elements of the drawdown will be to repay that US $50 million Newcrest loan facility. As I said, there's this lovely arbitrage where that's costing us 8%. This is costing us 3.5%. So, we kind of love the cost saving around that. There's no hurry to do that. We will have to go through the drawdown mechanism. Documenting a debt facility is a month or two work. We have the commitment letter. We need to complete that process, but that will be and is envisaged to be under the uses of funds. That is exactly one of the first steps that we'll be taking.
So we can expect that to be a couple of months, say.
Yeah, I think that's a good rule of thumb.
Okay. Why not Wyloo? You mentioned Wyloo, not so well known across here in the UK, clearly very well known in Australia. Nick Taylor asks, can you please let us know what you know about billionaire Andrew Forrest, apart from the fact that he's a billionaire, clearly, and his private company, Wyloo Metals? And I would say my part of it would be, why Wyloo?
Well, just briefly, I don't purport to have any particular deep, knowledge of, Andrew, but Wyloo, I understand, is the family station, and so that's the genesis of that name, as I understand it. But it's lovely to have that that kind of tradition.
Why them though? Why Wyloo? What do they bring that others wouldn't have?
Well, I think Wyloo Metals has just this tremendous reputation around being, patient, deep funding support. And I think what they try to do, as I understand it, is back the next generation of high quality developments. And I think that's exactly what Havieron is. So we feel it's just a tailor-made partnership. It gives us this strategic investor, which gives us time to unlock that full value in Havieron. And I think in terms of Wyloo, we've got this lovely connectivity, not just in terms of my engagement with Wyloo, but also the connectivity through Mark and Elizabeth coming from Fortescue, which overlaps with Andrew himself. So it's this lovely confluence of factors that gives us a strong basis of relationship, but just a funder and a partner of choice. And I think that the record of Wyloo demonstrates their willingness to commit to generate value over time. I also know Luca quite well, the head of Wyloo. I've worked with him previously on transactions. So again, it's these multifactorial features of relationship that really bring together finding the right fit as your strategic partner.
But they most interestingly didn't just mention Havieron. They mentioned your other projects in the Patterson. So do they have a genuine interest in exploring and developing those with you?
Yeah, look, again, one of the lovely things about this funding package is having enough funds to also pursue the exploration strategy. So, I love to orientate people around our the three pillars of our strategy: deliver an expanded Havieron, continue to invest in the drill bit, and unlock exploration value in the portfolio, and position ourselves for inorganic growth. So in terms of that second feature being let's start. So Havieron, I think without saying, is the cornerstone asset and something that is clearly an asset that's incredibly attractive as the next tier of world-class assets in Australia.
Okay. Other people. Sorry, yeah. Wyloo.
Well, I was just going to say, but Wyloo specifically mentioned, and a big feature of our discussions with them has been the geology and unlocking the geology around Havieron across that Patterson footprint. We also love Ernst Giles as well, remember. But, I think if we can have a discovery there, it doesn't need to be the size of Havieron. If it is, that's out of the ballpark. But even a half Havieron or quarter Havieron still creates so much value next to this infrastructure. And I think this helps us accelerate that.
Okay. Let me just quickly ask you about some of the shenanigans that have been going on, which have taken us to this point. Do you have any thoughts as to why Sandeep and Newcrest didn't opt to pay for the 5% stake? Why didn't they buy the 5% stake, which you clearly think is worth far more than $60 million?
Yeah, look, that's a better question for Newcrest. I think the way
you must have some kind of take on it, though. I mean, round your board table, you must have discussed this.
Yeah, well, look, I think the narrative for me is this was the best outcome for Greatland shareholders. It increased our fundamental value from a medium to long term by around 20%. That's extraordinary. We love the asset. Why Newcrest may have thought there was an opportunity to not to exercise the option at that time is a bit of a curveball. But look, as Napoleon said, when never interrupt someone when they're making a mistake. So we were delighted to hold on to our full 30% of Havieron.
Okay, you get today's gold star for that one. That was brilliant. There's questions flooding in from all over. To what extent has the debt and equity package de-risked Greatland and secured the future? I mean, this is pretty fundamental, I think.
Well, and look, you know, what I haven't mentioned, but should have, is the Wyloo investment is subject to shareholder approval. But that is incredibly important because the equity unlocks the debt. And that's why this is a full de-risking event, because it gives us both the debt and the equity to feel we're fully funded. And we know we're fully funded on the PFS. There's still some moving parts in that feasibility study, but we're actually, you know, we have a really important liquidity buffer there. And that liquidity buffer, you know, services a number of aims. You know, it services any upgrade in the cost to put Havieron into development. And remember, we want there to be an upgrade. It's going from 2 million to 3 million tonnes per annum. That's what the PFS tells you is the intent, and we want that to be the outcome. 2, I talked about ongoing exploration, and 3, we want insulation from any inflationary pressures. So we've intentionally, we make no apologies for going out, and we haven't just funded to the dollar we need. We've actually put in an appropriate liquidity buffer. And right through the life of Havieron, we want to be not the junior partner saying, let's slow down expenditure. We want to be accelerating it. We want to be saying, look, can we bring in more drill rigs? Can we unlock more value? Because it's Greatland shareholders that are more leveraged to the success of Havieron than you get by sitting in the broader Newcrest portfolio as a shareholder. So from our point of view, we'll do everything we can to accelerate the development of Havieron. And that means having the funding to keep up with Newcrest.
So Nick Taylor asks, it's a simple question, easily answered briefly. Where and when does that shareholder vote take place?
Look, UK shareholder meetings are around about 3 weeks, I think 14 days of notice. So I'd be saying kind of early October, but let us get out that notice of meeting. We're kind of finish this job onto the notice of meeting tomorrow.
Okay, that's work in progress. Fair point. No, you've done a heck of a lot in what I think seems to be a fairly short time. Aziz Kagdi asks, the RNS states that feasibility study targets an expansion to around 3 million MTPA during the December 2022 quarter. Please expand on this statement. So your next feasibility study, the next phase. Tell us all.
Yeah, so look, this comes back to that original PFS said it was centered around a 2 million tonne per annum production profile. The PFS went on to say that it recommended a 3 million tonne per annum, so 50% bigger production profile be taken to the feasibility study. That remains the intent. So again, you know, a 50% expansion we should be celebrating, and that's our expectation. And Donald, if I digress for a moment about, you know, this happened again, it's all about saying, you know, people should have confidence that we planned for this. We planned that we knew that we'd need debt. We knew that we need equity. We knew that we needed the best team we could find. And although it's all kind of come together, I've been trying to work up all these multiple streams, but needed to understand our position in the joint venture to finally take these things through to execution. And, you know, that what was afforded to me on I think it was the 21st of August when we got that outcome with the option. So we were ready to go because we did a huge amount of preparation for this.
At that time, I thought you were incredibly confident, incredibly happy that you once again had the 30% share stake in Havieron. And I was thinking, but doesn't this come with an enormous headache of having to repay that loan very quickly? I mean, if you could tell us how soon that loan was due to be repaid, and it puts you, I thought it put you under enormous pressure, but you knew things that we didn't.
Well, and I had guided that people should have confidence that we had prepared for these
Shaun, managing directors have to say that though, but we don't necessarily believe them all the time.
No, you should have confidence, Donald, but thank you.
Okay. Okay, to less happy news. dilution, share dilution. Now, not everyone is happy that that people have been granted options at 45%. That's above the placement, 45% above the placement price of 8.2 pence. I personally bought my Greatland Gold shares at an average around 20p. So if you do the maths, I do hope they drive the share price well above 12 pence. What do you say to that?
Look, let me answer this in two parts. Look, you know, Greatland, you know, had about 4 billion shares on issue, and when I joined, I think we had about $4 million in the bank and an outstanding funding horizon, which was unknown and unfunded. So look, we have issued some equity over a series of equity raisings and then bought in some incentive plans. But really, if you contrast the position that we're in today, I think from an Australian dollar, we've raised around $400 million in about the last 3 weeks. Now that is a sea change, a transformational event in terms of being able to articulate that we're now funded, and we've done it for less than 20% dilution. So I think when you compare from where we started, this outcome is incredibly good value for money. If I talk to the equity plan for the incoming directors, look, again, I think, you know, if you look at it in terms of the percentage that they're participating in the company, I don't think it's unreasonable. But more importantly, these people do not participate in the value creation today. They don't participate until we've increased the value about 46%. Well, that is a big number. And I appreciate that people have come in at different levels over the journey, but fundamentally we have to deal with the share price that it is today. And for them not, you know, it has to go up 46% for them to break even. They don't make a penny on that. They then get a lick of the ice cream, so to speak, for value beyond that. Now, I'm just delighted to have that level of alignment, because that is alignment focused on one relentless objective, which is to create shareholder value, to increase the share price. And I'm a shareholder as well, both through investing and through the staff participation plan. And what do I think will increase the value of my stock? A-grade talent. A-grade talent to make the most of the opportunities that we have. So look, I think to get people of this caliber, who frankly I don't think would have joined the board had we not said we are willing to do something a bit different. We want to incentivize you. Now I know them, and that opened the door, but also I wanted to say, look, the proposition I'm putting to you is actually, I don't want you to sit there on my board and, you know, as important as all those roles are, in terms of, you know, reviewing disclosures and that, I actually want you to be incentivized to be creating value. I want you to be using your Rolodexes to help us access capital and opportunities. And already, you know, this Wyloo investment, at least in part, is a reflection of that board. So I think already that has been a tremendously good investment for Greatland.
It's already been good value, you think? Very
much so. And it might be worth paying. We did not pay any fees on the Wyloo investment. We didn't pay any fees on the bank debt, which we self-arranged. That in itself, you know, has saved the company, you know, a huge amount that stays in our treasury.
It's very clever. And do you have the skills? And clearly you have the skills to have done that.
Yeah, look, it's part of my background. You know, look at Northern Star, you know, and previous roles, Sakari and Straits. You know, I've been having, you know, a banking background, a strategy background, an M&A background, and those things have really helped me. And we've built a tremendous team, because none of these things are done in isolation. having mining engineers that can go in and explain the proposition, having geologists who can go out there and describe the ore body, whether that be to the market, to another geologist, or to a potential investor. Having a CFO and a finance team that can execute these, having a health and safety manager who is absolutely top drawer and has created our systems and environment where we can bring home our people safe each day. It's all of these pieces in the puzzle that make for a good team. And that, I think, people heard me say at the end of calendar year 2021, my greatest achievement was building that team. And that's what's given us the platform to be successful at driving these outcomes in 2022.
Okay, another dilution question from Craig Montaigne. He says, "G'day, Shaun." So I suspect he's from your part of the world. "Thanks for all the team's hard work getting to this stage. My question is, do you see any more dilution for shareholders before we reach production at Havieron?"
Well, that's the beauty of this. You know, I've got to be a little bit measured about saying we're fully funded, because until we've all got a copy of the feasibility study, I have to be a little bit cautious in that language. But I do think we have a tremendous liquidity buffer that gives me confidence thinking that there's a pathway to that. But on the basis we're fully funded and we're ballpark kind of 18 months away from first production, this is what this combination of debt and equity is designed to do, is to say, no, that is sufficient, no more dilution. This is sufficient funding to take us through to production. And that is our intent. Okay,
one from me here. Might you expect the share price to perform better now that this massive uncertainty, this overhang has been removed?
Well, absolutely. And again, to take it back to a narrative I've been kind of consistent with over the last 18 months, it's all been joining and saying, gosh, I've joined and there are some transitional issues that need to be, addressed. From that PFS through to the option, through the uncertainty of what percentage of the asset we own, not being funded, all of these issues had to be addressed to attract high caliber institutional investments and investors. And that's what we've really done. I think it's been a very systematic process. It's been about hard work, about, doing the work to be able to take it to arbitration and getting an outcome that we felt was fair. It was about having the preparation with the banks. It was about being able to present ourselves to potential institutional investors in a really polished manner. And I think by doing all of that, we've set ourselves up for success. So I think we now have a very stable platform. And when you remove risk, because investors, at least in theory, think about investment in terms of risk and return. So the lower your risk, the more confident people should have in achieving a return, which should drive up our share price on a given expectation of cash flow.
Okay, I'm going to slightly take you to a different place and to look ahead at your other exploration projects. Two people, Chris Wilson and Eddie Davis, ask the same question: when are we expecting news for the drill campaign on our other licenses?
So look, the drill right now is on up in the Patterson, on the Scallywag and Jury. Look, assay times certainly recently have been coming down. Hopefully that trend continues, because I think for at least 18 months in Australia, it's been incredibly long queues. But so I'd like to see that. What we did, just to remind people, is we ran the RC rig that was really doing the pre-collars through that Permian layer. Now we've got the diamond rig up there and we're punching through to get core. So there's a cycle time of cutting and assaying, but we tend to try to get that information out as soon as it comes to hand. I don't have a formal time frame on that, but rigs are spinning as we speak, so that cycle time is about to kick in again.
Okay.
And sorry, I'll just add, we have 1 rig spinning this calendar year. I'd like to think next year, perhaps we have 2 rigs spinning, just given the funding proposition, and 3 if we can get on to Ernst Giles. So I think that all increases the cycle time for unlocking that option value, which again is one of the reasons why I think taking that little bit of extra equity and funding is a terrific outcome for us.
So 2 and possibly 3 drill rigs next year.
Well, look, that's the ambition. It's all kind of premised on access issues, really. You do need to get not just owning the tenements, but you do need to clear areas with the traditional owners before you can clear drill pads. So there's a process that we work through, and sometimes the timing, and you've got to kind of work up the momentum of that, the balanced, and then it's easier to maintain. So what it now positions ourselves is to ramp that up. We're really respectful. We enjoy and really embrace that relationship. In fact, the CEO of JYAC, the Martu partner there, sent me a really congratulatory text today about the announcement. So that relationship is wonderful, but it's based on mutual respect, which means we'd love to get on there and drill, but we also recognise that they're the traditional owners, and indeed the owners of that land up and so yes, that's our aspiration, but we do have to respect how we ramp that up and do it in partnership.
Okay, you're working with your stakeholders. That makes a lot of sense. Now, Chris Dance asks, will there be an updated roadmap?
In terms of a roadmap to...
I think he means one of these lovely clear presentations that you were saying were pivotal to you getting your core funding away.
Yeah, I think if you're talking about a PowerPoint, yes.
Updated PowerPoint would be a very boring way of putting it, but that's what it means, I think.
Roadmap was much more eloquent, but I literally was finalising some of these issues over the weekend. So at some point, we haven't cracked into the putting this into a PowerPoint presentation style, but we will be doing that. We'd like to have that ready for next week. So yes is the answer, and I think we've got some really interesting slides we can bring in, but that's worth doing well. So I know the guys are already working on that as we speak. In the background, there are some drafts zipping around.
Okay, now we've really got a rush of questions coming in. So literally hot off the presses, I'm going to start just asking you randomly. John G asks, when we start production in Havieron and have cash coming in, will you start buying shares back at some point to get the share number down?
Yeah, look, I think that's an interesting. I'm a dividend kind of guy. Perhaps a share buyback achieves a similar outcome. So it's certainly something that we.
Do you have a preference between the two?
Well, as I said, I'm a dividend kind of guy, but that does come from being in Australia where there is a franking credit tax benefit. You basically get the company passes on the tax that's paid to shareholders. I don't think you have an imputation franking system in the UK. So perhaps a buyback might be more sensible in that jurisdiction. But historically, as I said, in Australia, I've been a dividend kind of guy. But the concept of returning value to shareholders, I think, is a very sensible one. And equity has a cost, just like paying interest on a loan. So I think that discipline of paying either a dividend or using some funds to buy back shares is a really important dividend to have, discipline to have in a cash flow generating business.
Okay, Simon Moore asks, any news in our Tasmanian licenses? So having been all the way around Australia, we're now going to pop across to Tasmania.
Yeah, look, I think I've been kind of open with them, where we've kind of been talking with some people around, perhaps coming up with a mechanism where someone else takes over those assets, but we'd like to keep an interest. Look, we continue to have some of those dialogue, and if we can find the right partner and we think we have some good dialogue there. We'd probably like to put them in someone else's hands. Really good quality assets, but probably not of the size and scale that can compete for exploration dollars compared to some of the other opportunities in the project, in the portfolio, particularly up in the Patterson.
Okay, so Dipak Sard asks, have you made any strong progress in regard to inorganic growth opportunities, or perhaps partnerships or divestment opportunities with the existing portfolio?
Yeah, look, we do. We look at a number of these opportunities. We're incredibly financially disciplined. We have this fantastic privilege of having something the quality of Havieron in the portfolio. But yeah, look, we are active in that area. But again, I try to be consistent in my narrative. I've always talked about getting through these transitional issues. It was actually quite hard for us to merge with another company and then put the burden of funding onto that other asset. We really had to get our own house fully funded and in order for us to be in a position to work effectively with other similar size or indeed smaller entities. So I think, again, now that we've done that, it lets us take some of the good ideas we've got, some of the relationships we've built, and look to see if we can execute them, just like we've executed with the directors coming in, with the banks, and with Wyloo. Now we have an opportunity to look at that aspect of the relationships we've built.
Now that I'm scanning through these different questions, I'm seeing that people are asking, is there a connection between Wyloo and the various people who are coming in? And I've heard you say yes, but it's almost worth reiterating the fact that there is a broad connection between all these folks who are not just working in the mining industry, but have been working with each other, which is of great interest to shareholders.
Well, there's not a connection. So I think, again, it's a little bit what I talked about, being, trying to bring all the notes of the symphony in together. I think each was a virtuous feedback loop in terms of bringing in the other. Perhaps they're different threads that I picked up, and we've weaved them together. But as I say, they're not connected.
Okay, not connected. Okay, Philip Cookson asks an interesting one. He's broadly talking about a potential ASX listing. Firstly, many thanks for all your efforts on behalf of shareholders. Impressive hard work. That's good. You're getting a double tick on your report card here. Please, could you explain more about the potential ASX listing? How does this work? Does it cause further dilution? Does it raise funds? How does it affect the share movement daily? In other words, what are the benefits? Do a cost-benefit analysis on it for us.
Yeah, well, look, firstly, thank you for the introduction to that question. Really appreciate it, and on behalf of the whole team here. In terms of the ASX, look, I think that's a important augmentation to our listing platform. You've seen with Tribeca coming in, you've seen with Wyloo. What I think we've done is matured the platform where institutional investors are really interested in Greatland, which was not the case, 2 years ago. And again, I think when I started, I talked about that engagement with institutional investors and trying to keep the best of both worlds. We want to maintain this fantastic interactive retail base. We want to continue to grow that and mature it. And the best of both worlds is then bringing in that institutional buying as well. And of course, acting together, that's the best possible outcome. The more demand, the better, the more liquidity, the better. And so when I think about the ASX, look, we've now had a cornerstone with Tribeca coming in from Australia. Today, we've got the Wyloo coming in as a strategic holder. So that Australian connectivity is important. Now, I think I've talked before about having that ASX listing increases the number of funds that have a mandate to be able to invest in Greatland. Even having an intention to invest within 12 months brought us into some more of those mandates. I think that's really useful. In terms of where does the shares trade? Well, they'll still trade in London. what you typically see, even with a cross-listed, is the shares trade on the deeper market and the more liquid market, which of course is London. And that's good, and we should celebrate that. But I think if we can bring some buyers in, just because they're Aussie investor doesn't mean they still can't execute their order in London. And you've seen, I think I used an example previously, Kirkland Lake, where it was just a compliance listing in Australia, but allowed mandate locked funds in Australia to buy Kirkland Lake, in this case, on the TSX.
So you've got a very, very firm eye on institutional investors.
Correct. And it increases our appeal, and it increases our access to funding, which I think is important.
Great. Okay, very good answer. Kieran Delaney asks a good question. What, if any, future hurdles do you see Greatland having to overcome in the next 2 years?
Oh, look, no progress is linear. So, we'll continue to have challenges. I do feel, in terms of transitional issues, that's the end of that part of my my narrative, which we should celebrate. I certainly am. But I think now, as we move forward, look, we've got the feasibility study. We want to get into production. We want to be successful at that. And then we want to get into free cash flow generation. I think when we're at free cash flow generation, that is a huge step in the growth of a company. And when I think about value creation at Greatland, I think of it particularly in a 3-year journey. I think about the next 18 months, getting to the start of production and the generation of free cash flow. I think about 18 months after that, and then being ramped up to 300,000-400,000 ounces a year, 100% basis at Havieron. I think that's another huge de-risking event and demonstrating the potential of Havieron. And I'd like to think in that same 3-year horizon, we have a pre-feasibility study on that Eastern Brescia bulk mining proposition. And I think if we can do that, we've really unlocked a lot of value within the platform. So I'd like to think the issues that we have, although we'll no doubt have complexities and setbacks and nothing is linear, I think they're good problems. They're the problems about unlocking value into generating free cash flow and then demonstrating exactly how big that free cash flow can be.
Okay. We have a question from Paddy Gall, who says, "Hi Shaun, Sprott have issued a new note today where they say the new team opens the door to an exciting new growth phase." It certainly do. M&A as the buyer, not the seller. Okay, is M&A with you as the buyer, not the seller, something you'll be actively pursuing over the coming months?
Thanks, Paddy, and yeah, that was another very good piece by Sprott, that research. So look, I think again, I talk about the benefit of being fully funded and having a strategic holder. It allows us to maybe broaden our horizons as well. And when I say inorganic growth, I'm talking about kind of potential M&A opportunities. It's always been one of our pillars. But again, I think having stabilized the platform, or indeed having to really made it a very strong platform, I think it now gives us the platform to expand upon, be it with M&A or other similar type activities. So look, we're excited about that. There's lots of avenues we can pursue. And again, having a strategic holder with substantial access to funding. You asked about why, Donald. They are a preferred strategic holder. They're an incredibly well-funded organisation that wants to see growth. Now, having that as your ally on that journey is incredibly advantageous, particularly when combined with A-grade talent in the organisation and on the board.
This is, I'm afraid, a slightly random question. It's just, I looked at benchmark, and you talk about Newcrest were charging you 8% over benchmark. You're taking that down to 3.5% over benchmark. We don't know what Aussie benchmark is, though. So I just wanted to ask you that.
Yeah, a lot of people have probably heard of LIBOR.
We've heard of LIBOR, yeah.
Yeah, in Australia,
We
it's called,
invented LIBOR.
yeah, well, exactly. So in Australia, it's the BBSY, or the bank bill swap rate. So it's the same concept, but just the benchmark in AUD.
What is it though? At what level? What rate?
Look, it's probably notched up a little bit.
Approximately.
I'm going to say 2%.
Okay, so essentially the cost of borrowing is 5.5%.
Yeah, all in, yeah.
All in, yeah. No, I just thought on behalf of the shareholders, it's exactly that kind of level of detail that they want to know. Okay, fantastic. I'm just gonna go grab my screen again.
No, and random questions are good. They're good. It's a good fun format.
Oh, good. Okay. I'm afraid the last half has been a little bit random, but that's life. It's not as though they're not good questions, but they're less coherent. I personally love coherence, but random is interesting. And anyway, at the end of the day, you want to hear what the shareholders think. The second Wyloo option, it's warrants. It's a different form of equity. Why warrants? And do you think you will ever actually use that? They will actually take you up on those warrants. And Tony Stones is asking you about, he's a similar question. Why warrants?
Yeah. Look, so it was all part of a bit of a discussion about the basis that they were comfortable to invest in, and the basis that Greatland, was encouraging the Wyloo to invest in. Look, so like all negotiations, it was a healthy discussion. We had various different structures that were discussed. I think the balance for me is, look, the $60 million came in, at an exceptional pricing. To come in, at or a fraction above the share price is extraordinary. I can't think of another example where someone's come in a placement without a discount. So I think that is exceptional. So we are grateful, and proud that we got Wyloo to come in on that basis. But also, we really felt that they were coming in at a point where we're doing this wonderful appointments on the board. We were solving the debt puzzle. I felt it was a really good time for a new investor to come in. I think at a great point in the cycle. And the great thing about options or warrants is, fundamentally it's an agreement to come in at a higher share price. So I saw that as almost creating a premium entry point for our shareholders. If they don't come in, it's no dilution. If they do come in at that higher price, well, we've got a really significant premium on the existing share price, and it's a better way for someone to come in than them to have bought in at the share price that it was, yesterday. So, for us,
do you need them to, Tony Stones asks, second question from Tony, do you need them to activate the warrants to be fully funded?
No, and look, that is the sizing of the warrant tranches. The 60 was the number we wanted and needed to be able to come and say to shareholders, we have conviction that this is fully funded. We achieved that. We specifically worked with them to agree that number. And again, great reflection of the relationship, great reflection of the quality of Wyloo, that they worked with us to deliver that number.
Okay, Patrick Mitchell says, when's your next visit to London? When are you going to come and meet shareholders in London again?
Booking flights as we speak. Would have liked to have pre-positioned myself in London for this announcement as I did with the last one, but literally the weekend was essential to concluding all of this, and really appreciative to a number of the counterparties that also were prepared to work through the weekend to help us solve all this. So thank you to each of them. So look, I I think maybe not next week, but I'm hoping to get up there for a few days for the following week, and I'd have to look at what that date is, but that is the plan. And if so, Donald, we might talk to you about organising a shareholder town hall if we think that's something that people would have traction with people.
We couldn't be more delighted, and I suspect the answer is an overwhelming yes. I'm hearing them.
Look, I enjoy the interaction.
They enjoy the interaction with you. It's mutual.
Yeah, excellent. Well,
I've never seen happier shareholders. They love meeting you.
Well, this will be good. We'll have a little bit more to discuss, which is always good fun.
Certainly true. Philip James says, when do you think that Newcrest will announce that they're actually going to mine Havieron?
Philip, well, there's a sequence. The first step is the feasibility study, and then typically you'd see that final investment decision on the back of that feasibility study. The feasibility study is confirmed for the December quarter of this year. So,
can you give us any indication of when in the December quarter?
I don't expect it to be early in the quarter, so let's rule out September. I think everyone wants to avoid December, so through process of elimination, I feel November, but that is not guidance. That is my sense for it.
Okay.
But it's the December quarter is the official narrative.
Okay, now we've come to 5 o'clock, and we've had our hour, but we've still got just a few questions to squeeze through. Trevor Copeman asks, have JP Morgan closed the hated short? I added the word hated in, I have to confess. Have JP Morgan closed the short? And someone else asked about shorts and say, is our shorting, has that come to an end because we're fully funded now?
Well, firstly, we didn't seek to issue any equity to shorters through the placement, which I think is important.
It sends the right message, I'm sure.
Yeah. Secondly, it's a head scratcher for me. I thought the short would come off at the end of the option process. It didn't, but I'm not privy to the way they think about that. If they haven't, I think they'll be very disappointed if their view was there was a long-term funding gap. Hopefully we've disproved that narrative. But the great thing about shorts is once they're on, they've got to be unwound. So that is a huge amount of buying that has to come back into the market. So I hope they haven't taken off. I hope that benefit to us is yet to come, but we'll see. I think in the UK you've got 3 days to notify your short positions, and when I last looked, it was still on.
It's that time. It's the witching hour. We have got to the end of our hour and a bit beyond, and we're out of questions. Can you believe that? We're actually out of questions for you, Shaun. I think you've been absolutely tremendous. Thank you. It was 11 o'clock when we started this. I suspect it's midnight now. So on behalf of all the shareholders who've at very short notice gathered themselves to come and ask you questions and hear what you had to say, I'd like to say a huge thank you to you. I'd like to say a huge thank you to them. And a thank you to London South East for having got our act together between Friday, Saturday, Sunday, and now to deliver this event for you and on your behalf. Anyway, thank you so much, and have a good evening, you, and have a good evening to all the shareholders. Thank you so much.
Thanks, Don.